And a very good afternoon to everyone. Happy Thanksgiving week. Welcome to the Horowitz Company pop-up Q&A webinar for November 23rd, 2020. And what we do here on this webinar is discuss all things that are kind of going on throughout the week and give you the opportunity to ask any questions that you would like. So basically, with regard to some of the things that we want to kind of just make sure you understand, this is for educational purposes only. It is not a recommendation to buy or sell any security. And everything that we talk about is pretty much just informational. It is not to be construed as tax or legal advice or investment advice in any way, shape, or form. So with that, a couple other things I want to mention. If you have questions, you can put it into the Q&A panel that is probably in the bottom right there of your Zoom panel. And you start loading those up anytime you want. Fair game, anything that you want to ask about any subject, related to finance and money and investments, the dollar, the news of the day, which we had some today that was pretty interesting. You're more than welcome to ask that. I'm also going to mention to you that we started this back in March. I think it was about March. I mean, my notes go back right here. I got this pad right here that I'm looking at. March 25th. And one of the reasons we did so was there was a lot of confusion, a lot of things going on. There was a real sense of confusion, concern out there. And what we wanted to do was come together and provide a little bit more clarity in the area of investments and finance. Well, here we are in November. What I think we're going to do, because this was not really ever slated to be anything more than a very quick, that's why the name is called pop-up. It was not designed to be a very long-term proposition. A lot of the information that we provide you and that we do here each and every week is, information that we really utilized internally for our clients' use. The things that we talk about are written up on a regular basis in the client private blog for the Disciplined Investor Managed Growth Strategy. These are the things that we utilize for conversations with clients when they are asking about some of these items or some things that we want to bring to them or that we use within our portfolio management process. So I think just letting you all know, for those of you that aren't clients, it may be time to start thinking about becoming clients if this is the kind of thing that you're interested in, about what we talk about, how we decipher the markets, how we do our work. Because I think by the end of the year, we're going to be coming to a close with this particular webinar series. Like I said, it was only meant to be temporary to begin with. So what is going on right now is, there's a lot. Well, we have a short week that we have right now as Thanksgiving is happening on Thursday. Friday, we'll see a shortened time period for the markets. I think they close at 1 o'clock or so in the afternoon. But it's Monday. It's Monday, and lately, you know what that means. We talked about this last week. We talked about it on the DH Unplugged show. We talked about it on the Disciplined Investor podcast. It's Monday. That means it's Vaccine Monday. Yeah, Vaccine Monday. We seem to be getting several different notifications on Mondays about a vaccine. Started with Pfizer, and then we had Moderna, and now we have AstraZeneca coming out with some information. So we have 3 major vaccines that were announced over the last 3 weeks. And we also have 2 others. One is from Russia. There's another one out there as well. I think it's a Chinese vaccine. So we saw some decent news again today on the fight against coronavirus. And that helped markets jump, especially the Dow Jones. The laggard again was the NASDAQ, as the stay-at-home plays were not doing as well, because now we're starting to rotate today, just for today, into the post-pandemic recovery stocks. And what are those? Well, those are not your Zooms. They're not your Pelotons. They're more of your banks. They're more of oil and gas. They're more of your transport, your leisure, your travel, that whole value side of the equation, which has really been doing extraordinarily well over the last several weeks. And we've talked about this. So with these major announcements we have, even though AstraZeneca's was a little bit less of an efficacy versus the Moderna and Pfizer is now applying for EUA, which is emergency use authorization. Moderna probably going to be doing it within the next couple of days. They got to space it out. They can't do it all in one day. They got to space out this news. So what does this mean? Because a lot of questions right now. How fast are we going to get this? Well, we know that Pfizer is putting in for emergency use authorization. And when we have that emergency use authorization, it's probably just going to be for first liners or for people that are high risk, or possibly even people, maybe even in government. I don't know, people that can have access. But it's emergency use authorization only. And then we have to go through the logistics, the delivery, the storage, and the vaccine acceptance, which seems to be a big issue that is growing. This idea that, hey, you know what? Maybe not a total anti-vaxxer concept, but a concept of, this thing came around a little bit too fast, and they're getting all these approvals much faster than we would see under a normal vaccine approval process with testing and safety. And while we see the efficacy is really high, what are we missing? And what are the long-term implications of me taking this vaccine? I mean, could it harm me in the future? Right now they're saying, hey, there's no problem, there's no safety issues, but has it been tested for a long enough period of time? And this is not me talking. This is what you're starting to hear around, that people are very concerned about this. And I think that there is the issue with regard to the acceptance that could become a problem, because we need to get a lot of people vaccinated. Now, even if we can do this, and even if there is this acceptance, the question still remains the logistical nightmare of trying to get this done. Just think about how it was so difficult to get testing done and all the tests out and delivered and there and then done properly. So I think that our timeline right now is still mid-2021 in order to get vaccines for the average person, for you, me, and you, right? If we decide to do so. And, I think we have to talk about market expectations, because, the markets is still the expectations, right? What we are dealing with right now is all about, to a lesser degree, economics. Nobody really cares too much about that. Earnings are kind of important. The election, which seems to be going on forever, the pandemic, and stimulus. And the thing that I want to focus in on today is, if we do have a vaccine that is approved, and if that vaccine can be in fact distributed, and let's say it's even a great distribution program and acceptance, and people will take it, and it happens in the, end of the first quarter of next year, we still have a really long period of time until now and then. However, what does that mean for stimulus? This is a big question right now, because if the senators and the Congress people and the president and everybody involved in crafting a bill were really balking at a $2.2 trillion deal prior, and then they even, having a lot of concern about a $1.5 trillion deal, and the Republicans only want to put up a $500 billion deal that's targeted. Is that going to meet resistance if, in fact, there is some vaccines now available? Because remember, we really haven't had any major negotiation with the stimulus since we got the news on the vaccines. And if, in fact, we do have these vaccines, does that put a little bit of a monkey wrench into the process of getting some kind of deal done? For the reason of this. It's very simple. If we have a vaccine, everybody goes back to work, everything returns to normal. What do we need stimulus for? Again, this is the concept that we're starting to hear about. And possibly those that are in Congress, and even if we get to finally have President Biden versus President-elect Biden, you wonder if there is going to be a significant amount of resistance in Congress to getting this done. So it's a real big question. But I will tell you this. I think there is a need for targeted stimulus. Yes, no question about that. I think that the fact that we're going to see, we're just in the beginning stages of this extraordinary peaking cycle of this virus, and therefore there's going to be a significant amount of cases, and probably people that are going to be losing their jobs potentially is temporarily, and businesses closing. And as we're seeing that are happening, and schools closing, as we see have happened in New York and in El Paso and in San Francisco and in California and around the country. Texas is going to be firming up some of the restrictions, and we're going to see this everywhere, except for Florida, it seems, that our governor here says, the hell with it. We're riding it out, riding the storm out. Kind of like thinks he's in a hurricane. He's just going to hang on to his house in the Florida Keys. But the big issue is now not only do we have this corridor of time between now and when the vaccine is actually being able to be implemented, and it will provide protection if it does so, to enough people to provide a mass amount of immunity overall. From now till then, we have a bigger issue that the end of this year, many of the employment benefits and the excess benefits that were being utilized for people that lost their job are running out with no bill in sight to get it renewed. That's a big issue. Today we heard from the Retail Association talking about how, hey, but they could have a 3 to 5% increase in retail sales this year. Maybe, but you know what? They say that every year. And the truth of the matter is they're usually kind of off on their numbers. I would respectfully look at that and suggest that with people thinking about the holidays this year and maybe wanting to spend because they want to, get something and give something in a time that we have, this 2020 fiasco, feel better about it somehow. The fact is that they're going to be hit right in the head with the idea that, these benefits are possibly running out. And when we see that Treasury Secretary Mnuchin last week asked for money back from the Fed, about $450 billion that was being used to keep up and prop up the bond market on the corporate side through their programs, those special programs, and the municipal side. And the question is, well, what are they going to do with it? Let's take that $450 billion for a second and put it aside. That was, by the way, something that was planned. That was part of the deal. It was never expected to be a permanent plan or utilize all the money. And when we look at this time period, I guess we can question whether or not that $450 billion will be used somehow through executive order, like we saw the last time around, to provide for more pandemic uninsurance benefits, and that is possible. But then we have to also weigh that against what's going to happen with the bond market. Is it already in a good enough place that we don't have to rely on the Fed to prop it up? So, again, it's not a surprise he took his money back, but it's something to be considered there. Now, the global situation right now has been deteriorating, as we've noticed. Same thing that we're seeing here in the U.S., that we're seeing that the economics that are surrounding the global environment have ticked down a little bit. They're still better, of course, than they were. And, to many people's surprise, better than expectations for the most part. But there's a lot of concern about what's happening with this pandemic really starting to get out of control. Or it is out of control. It's not starting to get out of control. It is out of control. And the question, therefore, is, what is the outlook? Well, JP Morgan came out with their recent expectations for Q1 2021, and they're looking for a negative GDP print into that quarter. Yeah, I don't know if that's much of a surprise either, because obviously oftentimes we'll see this big ramp down and then a ramp up. We saw a historical move lower for the second quarter, a historical move higher for the third quarter. Fourth quarter's coming out, could be a decent quarter. And then maybe we'll see a little bit of a back off from there because, there's a lot of resupply going on. Now, some of that still is going on. I heard that recently, if you go to Walmart in certain areas and Costco's and various stores, that the shelves are once again bare with toilet paper and paper towels and bleach. Hard to find certain things. We're seeing that cars are just being bought at sticker price, no negotiations. A lot of interesting things that are happening right now. So that lends us to the idea that, things are okay. But again, probably going to see not a double dip, but a slowdown that will be ensuing in the first part of the year, with most agreeing that there'll be a recovery in the second half. And we continue to believe that the setup is to benefit value, as I mentioned earlier, energy, banks, financials, maybe in utilities to a degree, weaker dollar over time, like some of the precious metal ideas that we've been talking about. But that's just, a kind of a backstop and a background of what we're kind of thinking right now, combined with what we saw this week, today's announcement of the probability of Janet Yellen taking over the Treasury position. Markets seem to like that, as she was a very easy money, even keeled individual that brought a great benefit, not only to markets, but I think to the economy. So good stuff there. All right, so we're going to answer some questions here. We're going to go into that. I think I finished my list, just looking over it quickly. Seems that way. Any questions you have, please put them into the Q&A panel, not the chat. I see a couple in the chat. I'll get to those, but that's going to be it. We close that down. Usually don't look at that. Gets too confusing with a lot of people asking questions there. The first question comes from Carl, and Carl asks, can you give us an update on the KRI? So the KRI is the KRI indicator that we looked at last couple of weeks that talked about how this key reversal indicator was a psychological indice that showed that there was a lot of froth in the markets. A good amount of that had worked off into the latter part of last week. We saw that dip a couple of percent down. Still a little bit elevated. I think it was a +2, but not at a +6 anymore. The bottom line, I wonder if I still have those slides here. Let's take a look. Yeah. So this is where we were a couple of weeks ago, where we saw that the overall index measured a +6. But I want you to pay attention primarily to that second paragraph there, which says this generally indicates that a shorter-term reversal of trend is imminent and the market has become quite frothy. But the next sentence is really important. Look for the market to sell off over the next few days before potentially resuming the uptrend. So that's really important to understand, that you don't just initially slip out, and if there is a long-term uptrend that's in play, just go right into this massive corrective downturn. Investor sentiment, investor psychology. If you're in fact looking at a significant amount of upward action that's been going on for some time on a daily and weekly chart, not a 5-minute chart, and now you start to get a frothy situation, you burn off some of that froth. It's like clouds kind of going away. You get the sun back. Doesn't mean if you see clouds, it's going to be cloudy forever, nor does it mean if there's going to be sun, there's going to be sunny forever. The fact of the matter is this vacillates and wobbles. So right now we're at about a +2 or so after today, and after last week's little bit of a drawdown. Next question. How about the outlook for real estate, single family, small and multifamily, and large multifamily, aka residential, versus inflation and low interest rates? You always seem to provide a great high level perspective on these regards. Well, thank you very much for those kind words. So there's definitely a difference right now between, we'll call it residential and commercial. Let's leave it at those two differentials. Let's start with the commercial and discuss the fact that this whole stay-at-home concept that is being forced upon us, and therefore requiring many corporations to rethink their strategy on how to deploy their workforce and where their workforce will reside, and how they can, in fact, run their businesses not only effectively and efficiently, but with creativity into the future, and with advancement, and with the ability to expand what they're doing. Can they do it outside of the traditional office? And I think a lot of companies are saying, yeah, they can do so. So therefore, areas like, metropolitan areas around the country, whether it's, Dallas and Austin, and to a degree, or LA, San Francisco, and, you look at certain areas of the East Coast, up and down the East Coast, New York, of course. These are areas that are going to be under significant stress due to the fact that the commercial business is going out to allow people to, instead of working in their office, working from home. And that will therefore lend itself. In fact, if you think about it, a lot of the commercial space is really your single family or your multifamily homes, because that's where people are working. So we're going to trade in the commercial real estate for residential, because residential now will be a combination of your home and your office. So now, It's kind of a really weird situation because a lot of people are starting to leave the major metropolitan areas. It's not only from politics, it's also due to the fact that a lot of businesses are really in bad shape. And why, in fact, would you want to pay higher taxes, higher costs? Why would you spend $10 on a beer just to live in the city if, in fact, your business is no longer there? You lived in the city to have close proximity to your job. If you're not required to have that anymore, what's the point of paying the high tax and paying the high cost of living? Right? Does that make sense? So a lot of people are going to be probably seeing, as we talked about, this de-urbanization trend early on. We talked about it back in March, that we are starting to think that this is going to happen. It has happened in earnest, and it's continuing. Single-family homes, multifamily to a lesser degree, condos, townhomes, but smaller, I think all going to be good. Now, inflation, that could be good for real estate. Higher interest rates, not so good for real estate. So you have to understand that there is a relationship between interest rates and values of a house. And it's very simply this. If you could buy a house at $500,000 total value and your monthly, I'm just making up these numbers, the monthly payment is $1,500 because the interest rate is at 0.5 or 2.1 or 3.1, whatever the number is, $1,500 a month. If you want to go and sell that house and buy another house, how much can you afford if all of a sudden the interest rate is 5%? Well, I may not be able to afford $1,500 a month. I can afford $1,500 a month, but at $1,500 a month, the interest rate is higher, and therefore I can maybe buy a $460,000 house. So one of the benefits that is going on in the housing market right now is the fact that interest rates are very low. Good news, Powell has said we are going to keep interest rates low for an extended period of time, even if the economy runs hot. So there's some good news with that. But I think that you want to generally, you can have a little bit of both, but generally lean a little bit more residential if that's something that you're interested in doing. Ben asks a long question. Let's see if I can get through this. Can you help explain what is going on with the EV, the electric vehicle stocks like Blink and SBE? I don't understand the 200% jump in Blink in the past 2 weeks, when it has revenue of less than $1 million per quarter and now is $1.09 billion market cap. Also seems SBE is a much better post-charging acquisition, giving anticipated revenue, but is 28 market cap today would only be worth 10% of the merged company. Something doesn't seem to make sense and add up, and I am not understanding how this isn't making the KRI push to way overboard stages. These are small companies. And I will share with you, as a full disclosure, two things. One, Blink, BLNK, is a stock that we bought a couple of weeks back for the managed growth strategy portfolios. It's actually up at more than 300% since we bought it. So we've been paring back the position a bit. It's up 50% today. So nice little return on that. Actually, massive return on that for our clients. SB is another one, which I agree has a little bit more of a footprint in that. But, it's all about the technicals right now. Right now, also what's happening is it's all about a euphoria. I mean, look at Bitcoin. Look at what's going on in some of these areas. When you start to see this, and this is the reason why we pared back the position over last week. Every time this position got up 20, 30, 40%, we'd pare it back a little bit. Went up a couple of 20%, we'd pare it back a little bit so that we didn't get this overwhelming size in the portfolio to make things go a little bit crazy here. But still, 300% return or more is actually 300 I think it's close to 360% return in the last couple of weeks that we have on that. The issue is it's excess speculation. You have to manage your portfolio correctly. Now, to answer your final question here is, something's not adding up, and why is this not pushing the KRI to overbought stages? Because those are really small companies that really don't have a big effect on the markets themselves. They're kind of like outsiders, if you will. They're moving up with the Robinhood traders, and we'll be happy to ride that coattail if they're going to run it up like that. But at the same time, the KRI is more of a broad-based index that looks at many, many different things and options. It looks at various statistics on the markets. It looks at the psychological. This is just one component of it. But yes, it did. We were up 6 last week. We're still at a +2. So the KRI is much broader than just these smaller names. But good question. Thank you. Doug asks, do you believe with the Fed willing to overshoot on inflation, Do you think the Fed will be implementing yield curve control, or is that good, bad for one's investments? It's all about whether or not they are unable to manage. I'll call it the shorter term area, the belly to the short term of the yield curve. It is possible that if it gets away from them, they will establish yield curve control in the future, trying to make sure to keep prices down no matter what. I wouldn't put anything past them. I mean, today, Yellen was talking about, even though she's just also looks like the shoo-in for the Treasury Secretary, that, if a time of trouble, maybe the Fed would have to step in and buy stocks and bonds. So, we're getting kind of into crazy territory here where it's all about just keeping the stock market up and the economy is kind of secondary, but thinking that if we can keep the stock market up, the wealth effect up, then, it's all good. So I think that they will do whatever they need to do, however destructive long-term it is, by the way. And they'll do that before they go to a negative interest rate. I think that's their last item, the last checkbox that they want to attack because they see it doesn't work really well. But they will probably implement that if they had to. But yield curve control is a possibility if they can't keep control of the overall item. Next of the curve. I just was getting into the next question. This comes from Craig. He says, does Trump have the ability to order a neurological test of Biden? Need data? How about when he called his wife his sister on national TV? Yeah, I don't know. I mean, how about that time that President Trump said that he probably want to marry his daughter? Remember that? I mean, I don't know. You don't, obviously, Craig, you don't like Biden. I'm not saying you should or shouldn't. And, I mean, what if we were to ask for a neurological test on Trump? I mean, is he, I don't know, you can ask for different things. So I probably not. I think right now the vote supersedes that, although we don't know the end of the vote here. But, I guess we're just going to have to find out what happens. If, in fact, of course, he gets into trouble, well, the good news, in a way, is you got backup. You may not like the backup, but you got backup. So I don't think that can really happen. Sorry, but it's possible. Next question comes in. Why, with some of these cloud digital transformation names going through the roof and the ease of getting in and out of these stocks, why would anyone go to the trouble of investing in Bitcoin, especially with the non-mainstream platforms you have to use and digital wallets and the potential for tax headaches? Seems like a lot of work, and not to mention hacking potential. I don't know. Don't ask me. I think Bitcoin's really interesting. I think that the idea that Ethereum is back to 600, Bitcoin back to 18.5 or so, give or take, is pretty interesting. But I think that goes back to a couple of questions ago when someone was asking about what's going on with the EVs and the names like Blink and all these other names and Tesla. And, you can pick all these. There's a lot of them. There's Workhorse, there's Nikola. It's excess speculation right now, and money is trying to find a way in. It's kind of the end of the cycle of where all this money was pushed in from low interest rates, quantitative easing, as well as fiscal stimulus. But I don't know. I'm with you on that. I don't really understand. Tim Mans, Andrew, if I'm like financial sectors, do you think small cap value financials would outperform large cap financials, to include fintech momentum stocks? I don't. Yeah, if that is the case, if you light it, if you light on the financials, I think that's a good play. I would kind of barbell it a little bit because you never know exactly what's going to happen, because you may have a situation, the smaller ones that everybody's like really hopped up on right now, kind of all of a sudden, if there is a double dip recession, these guys will get hammered pretty hard. So I would barbell it, I think, in that area. Next question comes in. Hi, Andrew. Do you think rates will go negative in the U.S.? Oh, man, I hope not. I hope not. And I don't think so. No, I don't think so. I don't think rates will go negative in the U.S. For a long time, unless things really get out of hand. Ben asked a question. Are these sessions recorded and posted somewhere? I believe I have found them under the old internal client website, but I no longer find them since it was rebuilt due to the road. No, these are all available on the disciplinedinvestor.com. These are all available on the disciplinedinvestor.com. Go to the right side of the page. See if I can bring this up here. Let's see if I got this here. I'm going to pull up a screen, I think. So you go to the right side, and here they are right here. I'll close that. They're all on the right-hand side. See all this? Click there. They're all there. So you can find that on the disciplinedinvestor.com. Hopefully that answers that. Another question comes in. Did you say that the KRI is a +2? There's an exclamation point or a question mark. So +2? Market is up every day since it was +6 last week. No, it's not true, by the way. I sold a huge position of my oil sector last week when it was a +6. Very good. The market was not up every day. As a matter of fact, the day after it was down. The day after that, I think it was down 2 or 3 days in a row. The main market indices. Dow it's really kind of a broad base, but it was down a couple of days in there and it resolved a bit. Not to mention the fact you have to understand that we're also looking at not only market levels, okay, where it's raw market levels, but you're also looking at advanced decliners, option strategies. We're looking at a variety of things to see if it's overheated or not. Last question comes in from Ben. For Bitcoin, I think it's because people like Kathy Wood say it will go to be worth $500,000 based on institutional going in 1 to 2.5% Bitcoin, like it previously happened in real estate when it was a new asset class. So, I think the Bitcoin issue, also the recent move, you have a lot more acceptance. We have things like, for example, we have governments talking about it, that the potential is that, hey, they will have a digital currency. So that kind of gives a little credence to it. You have companies like PayPal saying, hey, they'll accept it now and they'll utilize that for payments, etc. So, there's a lot going on with that whole issue. Sorry almost forgot this. Last question. This is why we put it into the Q&A. This is from Michael. He says, what are your thoughts with the Dems taking over on the ETF, MG marijuana ETF going forward? So if you know, by the way, slight sidebar here. That is a stock pick that we had in our game on DH Unplugged a few weeks back. I said, when the Dems come in, I think you may have a real upshot of getting some momentum on the marijuana names. There's still a lot of problem in this sector, whereas a lot of these companies don't make money. There's a lot of companies out there, but it's interesting if you want to kind of play it. It is a significant diversification of companies that are involved in that area within that ETF. And then he said, with the recent run in cryptocurrencies, what do you see when you look at funds like Block and yeah, I'm not gonna go over these individual plays here. I mentioned Bitcoin and what my thoughts are, and also an infrastructure play like another symbol PAVE. Infrastructure plays will be interesting also, whether that's the one or not. I think a Biden administration, when they're looking to really put out a major infrastructure plan. Don't forget, we've been talking about for years the whole idea of, hey, we got to rebuild the bridges. We got to rebuild the roads. We got to rebuild the railways. We got to have a coast-to-coast railway system. We got to rebuild it, and all of that has to eventually come in. And what a better time than not to do it now when we have the potential for a need to put people back to work. It's a great time to do so. Yes, we had the shovel ready back in the mid 2000s that never came to fruition. So maybe they're trying to do a second go at this. So I think that there is an opportunity there. The other thing is that, we got a good question coming in. Yes, I'm going to answer that question in a second. Stay tuned for that. This is important, actually. Thank you, Tim. I'm going to mention something that some of you that may not have been on the beginning that I want to mention to you is that these are going to end. These webinars are going to end by the end of the year. I'll let you know when that happens. If you want this kind of research and implementation in your portfolios, I really encourage you to check out all the things you have. Reach out, do a personal call with me. I'll be happy to talk about your portfolio. I really didn't pitch this too hard through this whole discussion because I really want to keep this open, but we're going to end this. And if you really want somebody to handle your portfolio, manage it the way that we talk about it, what you know about what we do here, the things that you hear from me on a regular basis on the Disciplined Investor podcast, in these webinars, on the Disciplined Investor podcast and DH Unplugged. Listen, there's no better time than now to really start thinking about your future. We will be happy to look at your portfolio, and maybe there's nothing we can do with it. It's like, all right, it looks good to me. But you know what? If you want us to look at it, send me an email, info@horowitzco.com. It's right there on the screen. You can call our phone number, 954-349-0800. I never give away the phone number verbally. I just did. If you want to call up, ask to set up a time to talk with me, and I'll go over everything with you. We'll see make sure that you're in the right place, okay? So please take advantage of that. All right, this last question that I told you I was going to answer is, could you explain on here what are the smoker plans for Thanksgiving? What we're doing for Thanksgiving on the smoker. Okay, here's what it is. First, we are right now marinating a bottom round that's been sliced thin, 1/4 inch thick, marinating in some Worcestershire soy sauce, brown sugar, a full jalapeno that's been macerated, as well as a few other spices in there, garlic, etc. It's being marinated in that sauce right now. We'll put it on the smoker 180 degrees for about 4 to 5 hours with hickory smoke. We're going to get some beef jerky out of it. Second thing, we're going to be putting on a pork belly. We're going to make pork belly burnt ends. And what we're going to do is a couple of things with that. We're going to have them for little appetizers, but I'm also going to cut those up and chop them up, re-saute them, harden them up into small chunks, put them inside the baked potato to go inside of something we're going to have on Friday. Hold on to thought. On Thursday for Thanksgiving, I'm doing a spatchcock turkey. So we're going to take the backbone out, and what I'm going to do there is I'm going to brine it for about 12 to 14 hours, a little bit of salt and citrus and aromatics, and then we're going to take it out, and we're going to put it on the grill with a bunch of spice on top. I'm going to put a hickory, probably a little bit of a fruit wood in there as well, and cook that spatchcock for a few hours. We're going to have a great turkey. Now, on Friday, when my parents come over, on Friday, when my parents come over, we are going to have a 30-day aged ribeye. I've been aging it in my refrigerator. I think I put a picture up. If I didn't, maybe I will. It's this kind of dark out external pellicose right now. We'll cut that off. I'm going to sous vide that, throw it on the grill real quick to finish it off with a torch on the end. Put it with the baked potato, maybe some spaghetti squash, or I'm not sure what vegetable yet, with the baked potato, with the bacon bits or the pork belly bits in there. Should be oh so delicious. Anyway, thanks for asking, Tim. That's where we are right now with the process. We'll see how it goes. So thanks so much. Thanks for sharing. Thanks for being here today. I'll see you again next week.